Retail theft concerns and heavy markdowns had caused a 23% drop in profits in the second quarter. Now the company is excited about the holiday season following a strong back-to-school demand. Our next guest is a bit wary of Dick's chances here going into this report. Let's see how he feels now following these results. We want to bring in Wells Fargo equity research analyst Will Gaertner. Will, it's great to see you here. So certainly a quarter that maybe many on the street had not been anticipating here. Pretty strong results comparatively for Dick's. How do you think this sets up this retailer for the current quarter and then looking ahead to 2024?
Yeah, well, thanks for having me. I mean, look, this was no doubt a very positive print for them. You know, this is probably one of the first steps for investors to get reengaged after that whiff in 2Q, right? You know, the stock got clobbered after they missed gross margin. Look, I mean, they clearly have momentum going into holiday. And, you know, interestingly, you know, we had cut numbers going into the print, you know, given the weak data, you know, credit card and traffic data. So, you know, they kind of bucked that trend, you know, in this quarter. So we'll see what happens in the holiday, obviously the most important quarter for them.
Well, when you think across kind of the Dick's Sporting Goods operation and the number of storefronts and the inventory mix, what did they get right about this quarter with that inventory mix?
Yeah, I mean, look, they've pivoted to, you know, more sort of soft line stuff, right? They've created these new footwear pads, right? So they're full service now. So I think that's really helping driving, you know, their footwear offering. You know, their private label offering too is highly sought after too, and that's, you know, that's a big margin driver as well for them.
Well, isn't part of the reality here with Dick's Sporting Goods that there's really no other place to buy sporting goods? And this is a company that continues to capitalize on what is really darn near close to a monopoly.
Well, I'd push back on that a little bit. You have people like Academy Sports, actually, which we prefer over Dick's, that are really starting to, you know, grow their store base. They have a lot more square footage opportunity than Dick's. Dick's arguably you could call them saturated at this point. You know, they have, you know, close to 800 plus stores across their banners. And so I think their square footage opportunity is less so than a lot of these sort of emerging sporting goods places like Academy.
When you see some of the inventory issues that some of these retailers are still dealing with and coupling that with the fact that retail theft is still occurring and one of the big challenges here for the group, how do you see some of the I guess, approaches or the ways that Dick's Sporting Goods has tried to address this? How does that compare with some of the rivals?
Well, look, I think they got caught a little bit flat-footed last quarter. You know, they talked about shrink as being a bigger issue than they had sort of imagined relative to pre-COVID, right? So they're baking in 50 basis points or so of shrink as a headwind this year. And look, I mean, I think that one of the reasons why they missed gross margins this quarter is possibly because of more shrink than they anticipated as far as what they're baking in. So, and I think the way that they've dealt with it is, I think they were a little late to the party because I think they were doing checks once a year. And I think what a lot of other places have been doing is, you know, you have to check your stores more often, right? And so they were caught a little bit flat-footed. I think they've sort of figured it out a little bit. But again, I mean, I still think it's an industry-wide issue that everybody's going to have to deal with.
Well, just lastly, I mean, when we think about the core customer that this company is going after, there's a lot of households right now that are seeing the resumption of student loan payments, and we've had a conversation at length about how much that could potentially impact retailers. Does that show up at all in the Dick's numbers here?
Well, it hasn't, right? I mean, I think people are still, you know, the labor markets remain strong. You know, and people are spending on things that are quote unquote, I mean, Dick's would tell you it's sort of necessities, right? So people that are doing more running, people, you know, kids sports, all those things that sort of have become more or less necessities, and that people, you know, are structurally there's more outdoor activities. You know, people are engaging more in running and exercising, and so these are all sort of structural tailwinds for a company like Dick's versus, you know, a mall-based apparel retailer, for example.
Will, thanks so much for taking the time here today, kicking off the show with us ahead of the market open. Will Gaertner, who is the Wells Fargo equity research analyst. Thanks so much.